Good evening and welcome back to Be Rich. Shashwat is back in university, and so I'm back to doing with my brother today. And I wanted to do a talk on Japan, where the Japanese central bank governor has said that wage growth is good in Japan, and immediately the yen moved up a bit, and Japanese financial stocks are rallying, and with the hope that finally negative interest rate cycle is over in Japan. Japan has seen many false dawns. We do not know whether this is a false dawn, but that is for another day because there are questions from the Instagram which Vinod wants me to talk today.
Yes.
Over
The
to you,
question
Vinod.
is, good morning, Vinod. In this video, which is your Sunday video, it is with Shashwat. Anand talks about selling Natco because of the antitrust case. Apologies, I beg to differ here. One cannot predict when market will fall or when market will rise. If we sell our holdings anticipating individual stocks to fall or rise, we are not investors. We should do strong fundamental analysis, see the promoter. If everything is good or bad news, we should accumulate more share. That's how Anand waited for Tata Steel from 1000 to 250. The same case for ITC when it dropped. We should add more. Mr. Market cannot beat time. So regular monthly investment of for 20 years will beat all the macros and micros, small setbacks over the long term. If we have good conviction, we should hold on for eternity.
Okay,
This
this
is
is great advice, but this is for people like me and Shashwat who are very hardened. I have managed. My mom transferred knowledge to me, and I have transferred knowledge to Shashwat. So the combined knowledge of 2 3 generations is we have seen every fall since Harshad Mehta. But most of the people I'm talking to are people who are very nervous. He started considering Natco at 720. It dropped all the way to 500, and then people got extremely nervous. It went up all the way to 928. I said, if you are nervous, you can.
correct. The caveat is
If you
you're
are
nervous.
Now, the other caveat was today I expected already it fell from 910 to 880, and today morning after the news was prominently discussed in all newspapers, you did expect a knee-jerk reaction. Most of the people who follow me are novices who will have a major episode, and as expected the market promptly dropped by 6%. So if you have seen Natco go from 800 to 400 and you have not sold, and then you can add more. I have seen ITC go from 300 to 130. I did not sell. I bought more. But how many people have that nerves of steel? Like Daniel Kahneman and Amos Tversky have repeatedly taught us, it is very clearly a case where a loss is twice as painful as
Very
a
true.
profit. So, this is for people who have just entered the market in the last 5 years who have not seen a big fall. They will be extremely nervous. It is meant for those kind of people. If you have bought in small quantities and can afford to take hits, great. But I know of a person whom I said buy a South Indian bank in small bits when it was in single digit. He put in about 5 lakh shares. At 17, he was asking me what I should do with it. And that is the time it got into some trouble. So, the advice for you is if you have bought it in Tiffin coffee style, I have no issue. But if you have put all your money into it thinking it's a great bet, Anand is a prodigy and he said the right things, and then you better book your profits.
Correct.
So, these are two different things.
Yes.
And the person who questioned is in a minority. The most majority of the people feel otherwise.
Okay.
So I cannot give advice for. I tell everybody I don't see people from the other side. This is my opinion. If you book your profits and if it comes to 700, you feel nice if you have sold it at 880 and buy it at 700. This is what I wanted people to learn. It's a caveat. The caveat is if you feel nervous, and most people feel nervous. It looks good at 830. When it comes to 500, you will say, you could have told me.
Correct. Now, your advice coming to debt funds. Should we be investing in debt funds? If so, which debt funds should we look at?
Okay. As far as debt fund, I am not a fan of debt funds. Like the Franklin Templeton fund showed you, and several other debt funds showed you, they have invested in companies such as Reliance, Vodafone Idea, and other companies which are dodgy in chasing returns. And these Reliance, Anil Ambani is a major case. And
Whoever the manager curries favor with,
yes,
he'll be buying their debt.
the manager is a human and he is fallible. And in a rising rate scenario, debt funds lose money. The Reserve Bank is desperately trying not to raise rates. But if Saudi Arabia gets its $100 a oil barrel, he will be forced to increase interest rates. And if interest rates go up, the value of your debt fund will drop because they have to mark to market. My advice has been that you look at very good, you do your own metrics, you do your homework. There are plenty of very good bonds available at 1 lakh, and some of them are available as NCDs at 10,000 rupees. It is better to hold a basket of NCDs and bonds rather than a debt fund. This is my belief. And it is tradable. So if you need money, you can sell it.
One person was asking me about your portfolio, what you're buying and selling. So I said your case is different from Anand's case, so there's no point comparing. So he said completely accepted, sir. But just wanted to understand both ways. If someone can handle the pain and invest more, then there is a possibility they can still hold on to other investment wise, or is selling always a wiser strategy in these kinds of situations? So when is it always to invest bulk amount when market goes down, or to keep 10-20% extra like Charlie Munger said and wait for the right opportunity?
Since you have brought Charlie Munger, there are very few opportunities in the market. So you have to wait for your right time. The whole idea is you create a Buffett-like model where your insurance float keeps on increasing at all times. So you have a series of income generating ideas from where float is generated. So you have plenty of float. So once you have plenty of float, you keep putting money away at small intervals at small periods of time. Small money for Buffett can be a couple of $1,000,000. Very small pocket change is a couple of $1,000,000. A small investment is a couple of $1,000,000,000. His float is $150 billion and counting. So it depends from people to people. I normally don't sell business unless I find something wrong with the idea of business. My holdings is two types. One is legacy holding, which my family has held for 30, 40 years. So in that you will find all sorts of stocks. In my own holding, which I have owned device since 2003, is a different kettle of fish. But I normally do not sell. But I keep adding very small amounts whenever I feel like, whenever I feel comfortable. If the valuations go out of whack, like what Tata Consumer or Titan has happened, I don't invest. I'm unlucky and that's it. But my idea is you should have a very high sense of filter. The success in the market depends upon your ability to say no rather than your ability to say yes. So first we have to pick up an ability to say no to stocks, to do every idea that comes. Second, it all depends on your liquidity. If my portfolio goes to zero, I will not care about it because my life doesn't depend on my portfolio going up to whatever value. But the chances of it going to zero are very less. It can come to 50% of my current value. If it comes to 50% of my current value, I may add 30-40% more and wait. But this is my style of doing things where it doesn't matter. My dependents are well provided for. They are not dependent on me for a daily expenses. So that gives me complete freedom to invest. My immediate dependent, I don't have an immediate dependent.
Hello, I'm your immediate dependent.
Sorry. Okay, we know there's an immediate dependent. What I meant is that I don't have to provide for a school, college, or anything of that sort. And Shashwat is done. Finished
But the
almost.
emotional support always has to be.
That is there, of course.
Yes.
But what I'm trying to say is, so I'm a different kettle of fish.
True.
From most of you.
Correct.
So don't go by my method.
So there, Radhakrishnan, Sanjeev Kumar, and Shakti, thanks for those Instagram questions. I've got you from Anand itself your answer. So guys, keep dropping those questions in my DM in Instagram. I'll try and answer them or get Anand to answer them. Some of you have been fortunate where I got Anand to answer you in your DM. So I'll keep this going. So this keeps it interesting and be rich now and then to pull these questions down and interact with you guys. So I hope you found this video interesting and entertaining as always on Be Rich. And do subscribe and share this video with all your friends and your family if you think this is something they'll watch. Do remember to turn on that bell notification icon so you'll be notified every time Anand and me and Shashwat come out with something new for you. From that said, see you in the next one.
I told you that I will be in Riyadh on the 22nd of September. The event place was not fixed. The team has now decided the event. It's in the holiday in Riyadh. Those who are in and around Riyadh and desirous of meeting me may contact the WhatsApp address below or the email. My team would get in touch with you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.